Dear Noughts, and welcome to this daily market commentary for Monday, the 24th of June, 2019. Just one more week to go for the month of June. And if last week was anything to go by, we were in for quite a week and possibly quite a summer here in the Northern Hemisphere. A dollar breaking lower, gold breaking higher, new highs on the year for crypto, and an interest rate environment that takes us back to the financial crisis in 2008. Add a trade war between the US and China and the possibility of a real war between the US and Iran, and you have quite the setup. Crypto obviously took the center stage over the weekend, although with all other asset markets closed, it will be hard for it not to. Monday will be more of a muted affair, with Bitcoin happy to consolidate at its newly elevated levels, albeit just off the highs. By the end of the New York day, the market leader was trading around $10,900. Ether followed a similar path, although did have one very short, sharp drop at the beginning of the day down to 295 before ending around about 308 as I put this together. One coin that really didn't want to join the party was Litecoin. As I've touched on before, you could almost argue that Litecoin has led the latter parts of this broader market rally. But over the past week or so, the forex coin has rather lagged and has today dropped to a low of 133.80 from a high last week of 146. And whilst everything else was pushing strongly higher over the weekend, Litecoin kind of sat rather static. It had one quick look above 140, but was reluctant to go on further. So might just be worth keeping an eye on that one going forward. Moving on to FX and equities. Well, Monday was a little muted for FX also. The theme of overall dollar weakness, however, did continue, with the euro dollar trading up to around 114, and dollar Swiss down to a low of 90.9710. Aussie moved up as high as 69.70. Take another look at that daily DXY chart that I put out there last week, which shows the overall dollar index rather than trying to look at all the dollar pairs individually, and you can really see a clean break lower in the dollar, taking us today down to a low of 96. Definitely worth keeping an eye on that one. It's a very strong break lower. For equities, quiet day also, with European markets a little mixed, and in the US, only the Dow Jones showed any gains, up just 8 points on the day. The really big mover during US time was, in fact, gold, which rallied almost 1.7% up to 1424 at the New York close. The same factors of a falling US dollar and low interest rates once again benefiting the yellow metal. On the day front, nothing of note today, although tomorrow does bring US new home sales data, as well as a plethora of Fed speakers, including Chairman Powell. So keep an eye out for some sporadic headlines during the day, which can obviously move the market very quickly if they are very specific to FX, interest rates, or other relevant topics. So from a technical perspective, I have this dollar Swiss chart up here in the background. Dollar weakness really is the headline story for FX at the moment, and there's probably no pair really shows that better than dollar Swiss. As you can see here over the last couple of sessions, this is a daily chart, so this is going back 3 or 4 days. Excuse me, 3 or 4 trading days, but you can see we've dropped fairly sharply from just above 100 down to today's low around 97.10, which also coincides with the previous low on the year made back in January, as you can see over here. So this is a strong level of support, but we have sat right on it. Any break of there, and every opportunity we could go down to test this next level of support at 95.42, which was from the low in September of last year. So definitely worth keeping an eye on. I would also expect the Swiss National Bank to make a few comments about the Swiss franc being overvalued. They normally do make comments about the Swiss franc being overvalued, but in the face of a broadly weakening dollar, this is going to be a new headache for the SNB. So pay careful attention. Those of you who were in the market in 2015, like my good self, will remember what happens when bad things happen with the Swiss National Bank. And if I can just take this chart here just back far enough, just to really jog your memory. Here we go. Okay, you can see here on, looks to be the 15th of January of 2015. Everyone remember it, dollar Swiss dropped from about 102 down to, well, has a low here of around 83.40, but I think it actually dealt even lower than that out there, and for a long time there were just no prices at all. So just be a little bit wary when trading dollar Swiss, especially when the Swiss National Bank start talking. It can get a little jumpy and market can get a little bit nervous. So definitely keep an eye on that going forward. And with that, I shall bid you all a good day. Hope you all had a good start to the week, and look forward to speaking with you tomorrow. Cheers.